Welcome to TheoTrade. This is Don Kaufman. It's April 30th, 2025. Just about 50 minutes to go to the cash close here on this Wednesday afternoon with the S&Ps trading down about 38 handles right now. I tell you right off the bat, I'm a little surprised that we've come back this much on the trading session. You know, why the surprise? Because there was a really bad data deluge. It just swamped the markets this morning. I mean, whether you're looking at like GDP, which was not good. I mean, one more quarter of GDP kind of contracting, and that's it, people. Chicken's done. You're in a recession. But it wasn't just GDP. We had ADP. ADP, obviously, private jobs report, that came in extraordinarily weak. And to kind of finish off, again, some of that data deluge this morning, you actually had PCE data, which is often termed the Fed indicator of choice. And that actually showed inflation was a little hot. I mean, could there be a worse mix of data? GDP, it's slow. PCE, it's hot. What did you get with jobs? They're slow, but that's not the jobs number that anybody looks at. Look, with this data deluge that we got this morning that was really bad, there's still a lot more to come. There's a lot more to come. We have non-farm payrolls coming out on Friday morning. You got earnings coming out from Microsoft and Meta, little Apple tomorrow. Oh, yeah, we are staring down the face right now of the possibility of a crap fest in this marketplace. But again, I digress. Markets are actually handling it incredibly well. In fact, one of the best ways to actually kick this off is to look at the SPX. Why? Well, the line that's across the middle of your screen, I'm literally going to freeze the screen right now too, just to illuminate this. That line across the middle of your screen, yeah, you know what that is? That's massively unchanged on the week. So we're sitting in this week where we have this $150 expected move. Here we are on Wednesday. Actual move? Nothing. I mean, you've got absolutely nothing. And I'm still sitting here looking at this and thinking to myself, I'm like, how did we rally back over here? Maybe we rallied back because bad is so very good. And you start thinking about this, and look, this is where I am an absolute purist now when it comes to price action. Too often, people are trying to make sense of data. You know, I figured I'd throw out, though, the GDP, okay, which who cares what the actual number was? It was bad. ADP, it was even more bad. Okay, is there such a thing? More bad. Push all of it aside because it's all for nothing. Who cares what the data was? Because the worse the data gets, the higher the likelihood of the Fed turning around and starting to do what? Cut interest rates, which is possibly, okay, why the markets initially sold off and have actually rallied back up. And again, it's ironic, though, that the rally back up took us to unchanged on the entire week. But again, I can't reiterate enough. You have a $150 expected move. And what have we done this week so far? Absolutely nothing. You still have a lot more data ahead of us, okay? And it's a tough position to be in right now because you know, you have the marketplace that's just Twitter happy as well, which also occurred today. There was actually a tweet that occurred that said, you know, the US is actually reaching out to China. The marketplace spiked, kind of faded a little bit after that. So it was a momentary lapse of reason. There's a lot of action right now that's just hairpin trigger. But let me give you, okay, some of the facts in here. Forget about like some of the price action for the time being. Right? Okay, we're trading 55.50. You know, newsflash, that's where we ended. That's exactly where we ended last week. All right. What do we have in terms of cold, hard facts? Well, one of the aspects that's interesting is the markets are down, not huge, but they're down. But volatility is still pretty amped up. The day is not exactly done just yet, but we're still in. And again, here's another time where I'm going to freeze the screen just to illuminate this. We're still in a, well, what I would term a big boy backwardation. Yeah, there's one you say a couple times fast. Big boy backwardation. basically implies we're still in the throes of what would be considered extreme volatility. Even though the last couple of trading sessions, and again, I'm going to come back to that in just a second, the volatility in just a second, even though the last couple of trading sessions, I'm now pulling up a 30-day 1 hour, and I want to highlight, okay, this is the activity literally from Thursday, this is Friday, okay, Monday, Tuesday, Wednesday, absolutely no movement, okay, on Friday, Monday, Tuesday, and Wednesday. You have 4 trading sessions, okay, we are stuck in the mud. Now today, yeah, we did trade down considerably lower, but basically bounced. That's why I say it. I'm like looking at the S&Ps and I'm pretty shocked over here. There's not a lot of activity, but at the same time, I'm saying there's not a lot of activity. Then why, okay, are the vol futures, they're still raging right now like there's a really significant problem ahead of us. It's going to take a real shock to the upside for these volatility futures to normalize. And when I start talking about big boy backwardation, look, May is way over July. May is way over August. And that implies that the next 21 days are still considerably more volatile than 112 days from now, meaning that, okay, the future is definitely a little brighter than the current or present market conditions. And it's alarming to see even after we've rallied. And that's why people are like, sitting here on, pins and needles. Are we going to go back into, are we going to go back into what? Some volatility? I have one very simple answer for that. Absolutely unequivocally yes. Even if we do pop to the upside, it's going to be met with some wild sell side activity. And as I said to you, today's, surprise was that we actually bounced off of it. I figured today was the day we're like, oh, all that data out there. Look, even if the Fed does start to cut rates, okay, they're probably not going to cut next week. Next week is actually, there's a May 7th meeting, okay? You're going to have to wait quite a considerable period of time. And they're going to actually cut what, a quarter point? Oh, that's going to make all the difference. Look, the Fed is going to turn into what I would term double down dovish. And that's what's going to happen next week at the meeting. They're going to turn double down dove. So whatever the administration wants, they're about to get it. And they're going to get it because this jobs report, this ADP report, that's the first shot across the bow. But the big one is obviously going to be this Friday. And again, quite frankly, I could care less what you might think or what I might think about the employment situation. And I'm not trying to diminish it, okay? But the expected here, 125, that thing comes in soft, okay? We're going to have real issues because the Fed will put employment over inflation any day of the week. Because you start laying people off, there's not going to be any inflation. That's just the bottom line with it. All right. So we still have ample volatility in this marketplace. We're still projecting that in the very near term, we're going to see some wild trade. The other aspect worth noting today, okay, is that very high degrees of correlation we're actually seeing early this morning, which is also goes to further my point that volatility is still very much with us. So, lo and behold, look, I know we have some big earnings coming out after the bell. As I said, I could care less. They're just data points along the way, okay? The markets right now, again, my opinion, they're holding it together extraordinarily well, given some of the circumstances we're in. Markets they don't like uncertainty. So the data, though, was very certain. And the data basically projected today, we're halfway home, if not into a recession already. We're halfway home to a recession. And I think the irony is that data was predominantly first quarter data, which, it's again, dilapidated, by that time you actually get it. The data could have gotten much worse given the fact that obviously, tariffs only kicked in really in April, and that wasn't in most of the data that we saw. So things could start to deteriorate even further. Earnings, okay? Let's talk just briefly about earnings. So as I said, tonight you've got the likes of Microsoft coming out. Yes, it's going to shift order flow, but if you got a negative Microsoft but a positive, Meta, or vice versa. Is it really going to matter? Because a day later, okay, you're actually going to get Apple out. And again, I'm making this point because too much emphasis right now is being placed on the earnings. The earnings, to me, they're price action, but they don't really matter because most of the firms are actually pulling their guidance. That seems to be the thing to do because, how can you guide, especially if you're reliant at all on any manufacturing or literally anything to do with China? You don't have any guidance. And the point being in there, you could have had the greatest quarter ever. Nobody cares. Okay. It's kind of like you're as good as your last trade. Guess what? You could have had a great quarter, but they only care about what the performance is going to be moving forward. So you almost have to depreciate a little bit of what you think about the earnings announcements. Okay. And start looking once again much more at the volatility, which is telling a very different story than the S&Ps are. Who's telling the truth here? The S&Ps have rallied back, but the volatility consequently is still very, very high. And in the SPX, you guys are going to love this. Inside of the SPX, which we only have Thursday and Friday left. Wait for it. There is still a proverbial crap load of movement left in here. 2 days left, over $100 expected move. So, I hate to say this, but ladies and gentlemen, keep those helmets on. Again, a whole lot of data came out today, but there's a lot more coming, and volatility clearly states, okay, this marketplace, once again, is going to turn into Mr. Toad's wild ride. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.